Morning everybody and welcome to today's morning market. So today I'm going to focus in on yesterday's Eurozone wage growth data, with wage growth coming in at plus 5.3%. And why is it important? Okay, so as I said, Eurozone wage growth data came in at 5.3%. How does that compare to the previous period? Well, the previous period was lower, so it was up 3.2% overall. And this is year on year for the first quarter of this year. If we then just dig into the sectors that people work in and the sectors that have actually benefited from wage growth compared to the previous quarter, just to give you a few examples, you've got the manufacturing, construction, information and communication, and financial and insurance activities. But not every sector actually registered growth compared to the previous time period. So we did see some sectors where actually you saw a reduction in that wage growth level. So some examples here include mining, utilities, real estate, and water supply and sewerage. And if we just look at that from a country perspective, what we can see is that you saw wage growth in both Germany and Italy increase, while actually you saw the rate of wage growth slow in France. But look, why am I sitting here telling you this? Why is this data point actually important for investment? And there's really two reasons for this. So the first reason is if we think around inflation in the Eurozone right now, so that's coming in at 2.6%, which was the last reading at May. Now, obviously, if you've got wage growth coming in at 5.3% compared to inflation at 2.6%, then wage growth is coming in ahead of inflation. So that's a positive. That's a positive because individuals have more money to spend and to consume. So that's positive for the European economy. So that's reason one why it's important. What about reason two? Now, reason two isn't about individuals, it's actually about central banks. And central banks look at wage growth as one of the key things that they consider when looking at the trajectory of monetary policy, so the trajectory of interest rates. So if wage growth is very high, if wage growth is very hot, then they're actually less likely to cut rates in the near future overall. So what else do we have for you today? A few things coming out a bit later on, US focus. So from an economic data perspective, you've got retail sales. You've also got industrial production data coming out a little bit later on. As well as that, you've also got some officials from the Federal Reserve, so the US Central Bank. They'll be speaking a little bit later today. So that may help give us some clues as to the direction of interest rates, of monetary policy, of growth even, within the US later today. That's everything from me. I hope you enjoyed today's morning markets. I look forward to speaking to you soon. Thank you.